Good evening, everyone, and welcome to our panel discussion tonight, hosted by the Richmond Center for Business, Law, and Public Policy at Columbia University. I'm very pleased to moderate this session tonight, which I'm looking forward to very intently, as we'll have an excellent speaker and then a very rich panel discussion regarding our theme of ESG investing career paths, a panel discussion for students and alumni. We have a large number of registrants tonight. We've got 161 folks signed up for this webinar, which is a testament to, of course, our panelists and our speaker, and also to the relevance of this topic. In fact, this very weekend, the New York Times Deal Book title story was MBAs Love ESG. And certainly tonight's panel is a sign that JDs and MBAs both love ESG, and we'll hear a lot more tonight about ESG investing, career paths therein, how people can find their way into careers that allow them to pursue their passion and interest for ESG investing. With that, allow me to say a few words about the Richmond Center, and then we'll turn it over to an introduction of the speakers and the panelists. The Richmond Center is an interdisciplinary center between the business school and the law school here at Columbia. We work with all students across both faculties, but also particularly with the JD MBA students, and we explore areas at the intersection of business, law, and public policy. And I'm very proud to say that we've now held this is our fourth event on ESG. We started with an event on ESG investing by public sector investors. We did a session called The Public Aspects of Private Equity, which was on ESG in the private equity sector. We then had a session last year on diversity, equity, and inclusion within the private equity sector. And tonight we now broaden across all asset classes again to discuss ESG more broadly from the perspective of careers and career development. So with that, allow me to say a few words of introduction for our speaker and for our panelists. Kathleen, if you'd like to advance the slides. So our opening remarks will be by Mark Zurak, who's a senior lecturer and executive in residence here at Columbia. He's at the business school, and I will read out his bio first. And then we'll have his, and then I'll introduce the panelists. So Mark A. Zurak teaches capital markets and investments, equity derivatives and equity markets and products at Columbia Business School, and also teaches at Cornell University as an adjunct professor. Mark is currently on the board of directors of the Binghamton University Foundation, and also serves on the boards of the Alzheimer's Association, Teach for America, Upper West Success Academy, ETC, Southampton Bath and Tennis, and the Tamer Center for Social Enterprise at Columbia Business School. Prior to coming to Columbia, Professor Zurak worked at Goldman Sachs for 18 years. So welcome to you, Professor Zurak. We've got three panelists who will take us through our discussion after Professor Zurak's presentation. The first is Sherry Trecker. I'll read her bio out to you as well. Sherry Trecker is the Sustainability Officer at the Washington State Investment Board, WSIB, which manages $165 billion in investments for 17 retirement plans for public employees, teachers, school employees, law enforcement officers, firefighters, and judges. As Sustainability Officer, Sherry is responsible for ensuring that ESG factors are appropriately integrated into the investment process across all asset classes. In her role, she partners with trusted leaders in sustainability, such as SASB, CERIS, CII, Climate Action 100+, the 30% Coalition, and CDP to advocate for an increased focus on financially material ESG-related risks and opportunities by companies, investment managers, like-minded asset owners, and regulatory bodies. She's also a member of the Institutional Limited Partner Association's Diversity and Inclusion Advisory Council. Welcome, Sherry. We're so pleased to have you. Our second panelist is Charles F. Michaels. Charles is CEO and co-founder of Sierra Global Management, an investment management firm launched in 1996 with holdings in European growth companies, including climate-related companies. Sierra Global invests across the clean energy spectrum using insight from climate science channel capital into companies with promising renewable energy, circular economy, and energy conservation technologies. Mr. Michaels was born in Madrid, Spain, and has lived in Germany, Italy, Switzerland, and the United Kingdom. Mr. Michaels worked for Goldman Sachs in London and Zurich, where he co-founded the company's European equities business. And our third panelist is Clara Fagan. Clara Fagan is a senior director with the Impact Investments Group at NYL Investors, which manages $282 billion across fixed income, real estate, and private placements for the New York Life General Account and third-party investors across the globe. Ms. Fagan is responsible for new deal origination and portfolio management, along with formulating and executing New York Life's impact investment strategy. This includes a $1 billion impact investment initiative announced in April 2021, focused on addressing the racial wealth gap by investing in underserved and undercapitalized communities over the next 3 years. So as you can see, we've got a diverse set of panelists who come from the asset owner perspective as well as the asset manager perspective. And as we get into the questions, we'll discuss that in more detail. So with that, Professor Zurak, if I may turn it over to you. And the way we'll handle the Q&A is that there's in Zoom, of course, there's the questions, the Q&A box. So please populate that with your questions along the way. And then at the appropriate juncture, I will go through those questions and I'll select a few, I'll batch them, I'll share them with the panelists. So please use the Q&A function in the Zoom application for you to put your questions forward for our esteemed speaker and panelists along the way. And feel free to put those questions while the conversation is going on, while they're fresh in your mind, and for us then to steer the conversation in that direction. And for tech support, you've got a couple of emails here. Kathleen Witherson, who is the director of the Richmond Center, and Ari Bright, who is a associate of the center as well. Professor Zurak, over to you, please, for your overview of the ESG.
So I guess I could share, looks like I can share screen. Great. Well, welcome everybody. My name is Mark Zurak. Amir was kind enough to give you my background. Since that, I think that bio was updated, I added another course on ESG investing in equity markets. I'm teaching it right now. In fact, I taught a class today. So what I think I'm going to do is just go through about 5 or 6 slides from my first class, more or less to introduce the topics in order for Sherry, Clara, and Charlie to really add the insights. All 3 of them are in the industry itself. I wish I worked in the industry when I worked on Wall Street, because there's a lot going on. I guess I would start by saying that having spent a fair amount of time just preparing my classes, ESG is complicated. Even if you look at what is ESG, that's not so easy to just describe it. And what I showed on this slide is the definition as defined by 3 different organizations. The most notable maybe is the UNPRI, or UN Principles for Responsible Investment. But what they write is the explicit and systemic inclusion of ESG issues in investment analysis and investment decision, but that's supposed to be the definition of ESG. So it's a little circular. They're using ESG in the definition of ESG. And then even the CFAs, who should be as expert as anybody at defining it, even there, they have kind of a soft definition. And I think it's that way for a reason. ESG includes a lot of things. And for that reason, it's hard to define. So what I'd like to do before we get into career paths is perhaps talk a little bit about the different ways people invest in ESG or think about it. And again, I'm going to focus, my class is focused on public markets. I think some of your speakers will hit private markets pretty well. So I'm not really going to talk much about them. ESG started, and probably its most popular form is exclusion, which means that you look at a certain senses of industries and you choose to exclude ones that you feel don't align with your values. That's very common amongst some large pension and sovereign wealth funds. And for examples, industries like coal, tobacco, gambling, weapons, fossil fuels might be fully excluded. Then you get into screening. Screening is really constraining your universe by assigning ESG factors into your constraints. And specifically, examples would be like using some sort of company that rates ESG stocks, like MSCI is probably the most notable, and not choosing the stocks they rank poorest within certain industries. So it's a little bit more wide-ranging than pure exclusion, but it's fairly mechanical in its process. Integration is really looking at your entire investment process and looking at ESG risks within all of your stock selection, as well as all of your portfolio construction. And even that is not the most, I would say, is not the most impactful form of ESG investing, but certainly more comprehensive than exclusion or screening. Sustainable, which in some cases is referred to as impact investing. And I want to talk about the fact that people use the term ESG, they use the term sustainable investing, they use the term socially responsible investing, they use the term impact investing, and sometimes they use them and that's confusing too. So I'm using, this slide was, the source of this was UBS, and their form of differentiation between one type of ESG investing and another, but it's not necessarily consistent across the entire industry in terms of the way they're categorized. But sustainable is taking it a step further. It's really putting financial and non-financial considerations on an even playing field, where you almost think of your objective function as dual. That is, you're simultaneously trying to capture the highest return possible, but you're also simultaneously trying to demonstrate some level of value or impact in the portfolio. And then you get to impact investing, which again takes it even a step further, where you're probably putting the non-financial factors even a little ahead of the financial factors in your investment process. And as a result, people who are investing that way perhaps have the view that financial returns take a small backseat to having impact, and arguably potentially willing to forego maximizing return to having impact. One of the things that's kind of controversial in the index, I'm saying the industry, is the trade-off between impact and financial returns. In an ideal world, you'd like to be able to accomplish both. And I would argue that most people that promote ESG investing say they accomplish both. Some people may say it's not, that there might be a cost to this. And I would say it's a true controversy as to whether there is a cost. Next. Again, I'm not going to go through the whole deck and torture you all, but just want to mention the fact that when people talk about impact in ESG investing, they often revert to the United Nations as kind of their main source for where they start with impact. And they kind of discuss two aspects of the UN. One is this United Nations Principle for Responsible Investment. And basically, that was started in 2006. And basically what it says is the following. If you're an asset manager and you contribute some money to the foundation that's the UNPRI, and you fulfill one of the 6 objectives showed on the slide, you could basically advertise your company as kind of ESG friendly, for lack of a better term, and a signatory to the UNPRI. And when you look at careers, I don't think you should assume that if the company is a signatory to the UNPRI, they're necessarily doing a lot on ESG. They're doing something, but fulfilling this requirement is not a high hurdle. And what I'll show you in a little bit is there's $86 trillion, which is a lot of money. When you consider the US globally, all stock markets add up to about $100 trillion. So the fact that the signatories represent 86, now this is cut across multiple asset classes as well as public and private markets, but still that's a huge number, but it doesn't mean that all $86 trillion are actively engaged in the ESG investment process. It just means that they sign the document, that they give some money to the UN, and they fulfill one of the 6 requirements above. Okay. Second thing the US has defined, which the more I get involved with the industry, the more impressed I am, and the importance of this, which is defining sustainable development goals, which are basically, you could think of as kind of quality of life, global goals that are often referenced when an ESG fund operates with the dual objective of achieving financial returns and having positive societal impact. When they turn the term positive societal impact into specific action items, they quite often reference these UN sustainable goals. So I just kind of introduced them. They're worth getting to know if you're going to be more involved in this. Okay. Again, I wish I had more time. I can go through more of these, but I don't. So I will just talk a little bit about the growth of the market. This chart I referenced earlier, this is the amount of assets that have signed the UNPRI, are signatories to UNPRI. And as you could see, the growth has been exponential since 2006. And as of 2019, it was about $86 trillion. And you could see the number of signatories growing, the number of assets growing, all pretty consistently over time. Again, this is kind of a low hurdle, so I wouldn't necessarily say the whole world's become ESG. Okay. Now, one other point I'll introduce, and Amir, I'm sure could talk to this if you have more questions, or anyone from the Richmond Center. One thing people are careful about when they think about ESG is something called greenwashing, which is basically using your involvement with ESG as a marketing tool without really kind of integrating it into your investment process. And there is some concern that this big number has a little bit of that in it. So another way, if you want to kind of drill down into perhaps something which I'd say is a little more focused, this chart shows the number of funds that can advertise themselves as ESG funds. Okay. And this comes from Morningstar, which is an analytics and consulting firm, which is kind of the world expert on mutual funds. And basically, Morningstar requires that to be called an ESG focus fund, you've got to fully integrate ESG into your investment process. So this would be, I would say, kind of a stronger version of ESG investing. And you could see that their growth there has also been very strong, with the number of funds more than doubling over the past 15 years. I think this is where I will leave you guys, but I think actually this is actually an important slide, although it's very busy. What it shows is it breaks down ESG investing using a different survey source than UNPRI. And as a result, the total size of the market is smaller. It's less than half, but still it's pretty large. It's about, I think it's north of 30, well north of 30 trillion. And basically what they do is they break ESG investing by type of investing, and then by region, and then within region also by type. So if you look at the chart on the upper left, you see that the most popular form in terms of assets under management in ESG is just exclusionary or negative screening, which was the first criteria I mentioned earlier. The reason why this number is so large is that some of the very large pension funds, as well as sovereign wealth funds, have that exclusionary factor. So that's really their form of ESG investing. Some of the largest ones are shown in a table on the bottom right. Then we get into what I would say is kind of more intense ESG, which would be integration, that is kind of full force employment of ESG risks and opportunities into your investment process. The next largest is corporate engagement. Corporate engagement relates to getting involved, talking to companies, trying to improve their ESG practices, as well in a more aggressive reaction, voting proxies to try and affect corporate boards of directors, as well as corporate resolutions, typically towards votes which are more ESG friendly. Then you get into norms-based, different forms of screening. And at the very top, you get into sustainable or impact investing. Okay. Remember, this is public markets. So the one thing I want to say is that if you're looking at an ESG career and you're talking to companies in the industry, you really want to know exactly what they're doing. Because if they say they're involved with ESG, that may not necessarily mean they're doing a lot, because there's pressure for every asset manager to do something. So the more impact and sustainability based investing, I would say that would be the highest level of ESG engagement, and with integration below that. And anything less than that is less engagement. Okay. I hope I didn't take too much time.
Thank you, Mark.
I'll pass it back to you, Amir. Is that okay?
Wonderful. Thank you. Thank you so much. And you've really set the table with a lot of important content, and I'm sure that our panelists will refer back to it. And thank you also, Mark. I know you kindly agreed to be present or participate in the Q&A at the end. So when we get to that part, thank you. We look forward to you fielding questions as they arise. So Sherry will be the first that I'll ask to take the floor now as we move to the panel discussion. And our first round going around will be if you can discuss a bit more about your career and how you got to where you are. And so, would love to hear about your overall career journey, why, how, and when you transitioned into your ESG role, which is, of course, very exciting in all of your cases, and how your day-to-day life as an investor might be different from that of your conventional counterparts. So over to you, Sherry. And then after that, we'll hear from Clara and Charlie after that. So Sherry first.
Thank you, Amir. Hi, everyone. My career in finance started actually when I received a Bachelor of Arts in Business Administration with a concentration in finance from University of Washington back in 2005. I had interned at Russell Investments through the spring, and I was offered a full-time position on the trading desk the day that I graduated. I actually got the call during the ceremony, and I was so tempted to pick up, but I was smart enough not to. It would have embarrassed my parents. And after working my way to manager of the derivatives trading operations team, I decided that I wanted to switch my focus over to equities, and I applied for a role on the US Equity Manager Research team. Russell is a manager of managers, meaning that they don't generally invest directly in securities, but they hire the best of the best investment managers to invest on their clients' behalf. My job was to go out and find those managers. Russell has a large European client base, and in the early 2010s, ESG started to become more of a concern over there, well before it was prevalent in the United States. I volunteered to help build out our ESG capabilities because I really did think that it would eventually make it to the United States. And I also thought that integrating certain ESG characteristics into the investment decision-making process could improve long-term outcomes. When I was at Russell, I had the opportunity to help develop Russell's first ever ESG investment beliefs, its responsible investment policy, and other key documents that ended up, they're still in place today. I was able to add an ESG score into the formal investment assessment tools alongside all the other characteristics that Russell thought was financially material. Doing this created this expectation that Russell analysts would ask ESG related questions during manager due diligence meetings. And let me tell you, it was really a rough go at first. I specialized in small and micro cap US equity managers, and some of these are literally 3-person investment teams. I would ask if they thought about ESG in their investment process, and they'd give me a blank stare and ask, what's ESG? So it's safe to say that the industry has really come a long way since then. So it was awesome to help develop that ESG program, and it's still in place today, albeit massively improved. However, it was always a side job for me at Russell. I was never compensated for my ESG work, but I was more passionate about it than anything on my in my day-to-day role as a senior research analyst. So after 13 years at Russell, I quit in early 2018. I sold my condo in downtown Seattle. I bought an RV, and I decided to travel across the United States with my cat Buster, pursuing my other passion, which is climbing. After about 18 months, I decided that I wanted to use the analytical side of my brain again, and I started to casually look for investment roles in late 2019. When I saw the sustainability officer role at the Washington State Investment Board, it seemed like a perfect fit. They were seeking someone with a finance background, specifically with a CFA charter, which I have. Their desired skills and experience lined up perfectly, and the job sounded really intriguing. Essentially, I get to build out an entire ESG investing platform from scratch, and I'm really happy that I made the change. To kind of answer the last question, my day-to-day role is completely different than it would be if I was a conventional investor. I'm the only person at WSIB who's dedicated to sustainability. And because I'm the person with the most expertise in the area, I'm called on to speak at public events and offer my perspective to organizations that I'd never imagined would be interested in hearing from me. Last week, I got to speak to nearly 200 members of the SEC about ESG investing in private equity and the World Economic Forum to discuss biodiversity and other climate-related topics. So it's really different. No 2 days are alike in the role. Perhaps someday it will become more systematized, but right now it just demands a lot of creativity, open-mindedness, and close collaboration with all interested parties on top of my fundamental investment knowledge.
Wonderful. Well, thank you so much, Sherry. There's, again, so much there, and I'm sure we all want to hear more as we go forward. And it seems also from what you said that you're using your technical fundamental analysis as well as these additional skills, and also the amount of public facing work you do seems to be far more than that of a typical investment professional. So thank you for sharing that. And if I could turn next to Clara. Clara, if you could share a bit about your journey and how you ended up where you are, and how your life is different today than it was before you switched into this ESG investing role.
Of course. Thanks again for having me join, and thanks to everyone for tuning in. So relative to my fellow panelists today, I've been in the impact investing space for just shy of 6 months, or just a little bit over 6 months. So definitely the newest one here, but my career journey really started about just over 11 years ago. I am part of New York Life's investment organization. I joined the firm straight from undergrad, was a finance major, also got my CFA charter, but I was essentially grew up in an investment role focused on private placements. So it's essentially fixed income investing, and you're really digging deep and doing heavy company due diligence, underwriting, and structuring transactions. And then you live with your investments and you manage those through the term. It's a illiquid market, buy and hold, et cetera. So that experience really built my foundational investment skills, which I think it's necessary for any role within the investment spectrum, ESG or not. So that really provided me with a foundation that essentially allowed me to make the leap earlier this year with everything that was going on with my organization. So how did I transition into ESG? So this really started about a year ago, so last summer. Given the events of 2020, COVID, and some of the other events that, sadly enough, really brought forward a lot of the racial inequalities that our nation continues to face. From the top down at my organization, there was a lot of focus to figure out how can we become more active participants in this space. And there was a research group that was being put together, and I was asked, would I be interested? And of course I said yes. What's more rewarding than applying your skills and doing good, or trying to figure out a way to do both? So I was part of that research group. And from there, sort of one thing led to another. And the more that we dug into the space and to try to understand what can we do from the social impact side. So as it was said earlier, ESG investing means a lot of different things to a lot of different people. What I specifically focus on is the S part of ESG, and it's really around delivering social impact. And I'll get into more details later on. But our task as part of the research project was really figuring out how can we deliver social impact and still maintain, continue to fulfill our fiduciary duty to our policy owners and deliver market returns. So the research was based on that premise. Once I started realizing that there was a path based on what we were able to gather to do both, I raised my hand to be part of we started being segmented into working groups. So I raised my hand to do more research into CDFIs, which are community development financial institutions. They're essentially the lifelines to a lot of local communities in terms of providing financing. So I did some research on that space and ways that institutional investors such as New York Life could partner with those institutions to advance their efforts and deliver even greater impact while still getting adequate market returns. And then once that work was done, so this was a very methodical and slow process, but it took time for us to sort of get to the end result, which was announce a team that would be dedicated to focus on this. But for me, once I started realizing that the opportunity was there, that the company was going to dedicate resource, establish a team, and really go after this space and try to figure it out, I went directly to senior management and raised my hand and expressed my interest. And for me, the reason why I was willing to sort of put myself out there and essentially say I'm willing to do this lateral movement and take the risk and be part of a group that's going to help build this team from scratch. It was more from pushing myself to challenge and not be okay with being so comfortable. So as I mentioned, I spent 11 years with the firm, with the same group, have moved up the ranks, felt very comfortable in my day-to-day and the work that I was doing, and really just wanted to push myself. And also, as I mentioned, again, the more you do research into this space and you realize what you can do if you marry your investment acumen and skill sets, et cetera, and do something good for society, it's actually very, very rewarding, despite the heavy workload that comes with it. So for me, it was really about being at the right place at the right time and just being proactive and communicating your interest. And sort of that's how I ended in this space. And then in terms of how my day-to-day is different from what I used to do as a non-ESG investor, as you may say, it really, having the additional lens around, the social impact does make your job harder. I will admit, anytime you're adding an additional constraint to your investment process, it just makes it that much more challenging to deploy dollars and invest, et cetera. You're really adding another screen. So not only does it have to meet the market returns, you have to, make sure you're getting appropriately compensated for risk. You're also now you need to make sure that it satisfies your impact goals. So from that perspective, it makes it more challenging. In other ways, it's definitely more rewarding, I'll say. It's tangible impacts that, at least for me, I can relate to. I grew up very humbly and, investing in affordable housing and keeping people in place, et cetera. It's something that resonates well with me. So the impact that my work is having today is I see it differently. It's going from helping a widget manufacturer do more and et cetera to helping this building stay in place and house tenants that otherwise would have been displaced, et cetera. So those are the two sides from my perspective in terms of how my work is different today.
Thank you so much, Clara. And one theme we're already seeing between Sherry and Clara's journey is putting your hand up to volunteer for these ESG efforts before there's a formal role. Right. So Sherry talked about at Russell doing the ESG work, although not being part of her formal role or her compensation being linked to it. And of course, Clara, similarly, putting her hand up for that research and now being part of that growing team. So that's fascinating. We'll turn it over to Charlie, please, for the same questions, your journey and how your work differs from that of a more conventional investment role.
Thanks, Amir. And it's really great to see the big turnout from the business school and law school interested in ESG investing. My role is investing in companies. I'm the CEO and founder of Sierra Global Management. We're making direct investments in publicly traded companies, historically mainly in Europe and now globally with our climate fund. My journey started when I was an undergraduate at UC Berkeley back in 1978. Where I wrote my senior thesis on corporate social responsibility. I found it when I was studying business at UC Berkeley. What interested me much more than finance or accounting or marketing was actually this class I took on the social, political aspects of business, and essentially studied corporate social responsibility and wrote my senior thesis on the topic. I stayed involved as far as being interested. And about 15 years ago, I had a chance to work with the Haas Business School at UC Berkeley to launch a student-run ESG fund. And I've been associated with that student fund for the last 15 years, as well as other sustainability initiatives at the school. And I'm eager to do more with the Columbia Business School too, as I graduated from Columbia with an MBA in 1986. I went on to work for Goldman Sachs in traditional finance for 10 years there. And then for the last 25 years, more in a traditional way, until recently, I've been running Sierra Global, which manages a long-short hedge fund investing in European growth stocks. A little over 2 years ago, I decided I really wanted to do something as you can hear from my background, I've been involved in for many decades, and that was integrate ESG into Sierra Global's investment practice. And as we look more at ESG, and the Green Deal basically was launched in Europe by the ECB at the end of 2019, I became very interested in the E side, disproportionately so, to the point where in April of this year, we launched Sierra Climate, a fund investing in companies with strong solutions for the energy transition. So basically, with respect to what I did in a more comprehensive way 2 years ago, and I'll hope to get into more detail later on this, is we integrated ESG, and I would say in a very deep way at Sierra, forming a responsible business and advisory group, hiring a head of sustainability, and bringing on board a very senior climate energy expert. And how is our process different from traditional investors? Well, I've been a traditional investor and now we've converted, if you will. So I would say today we consider in addition to the financial attractiveness of every investment we make, we consider sustainability. This is integral to our investment practice. I enjoy hearing Mark's discussion of different approaches to integrate sustainable investing. And what I would say is we started off by excluding industries that Mark highlighted are often excluded, from tobacco to weapons and many others. And we actually have values. So we exclude some industries where we think the companies have a bad impact on our society. Video gaming companies almost always publish violent video games, and there's an issue of addiction. There aren't many ESG funds that exclude video gaming companies, but we do, just to stay. So we think about this aspect. We've gone on to integrate ESG, And the concept of screening, we started to screen in environmentally positive companies. So the theme that Mark used the word theme as a way to do that, we actually have gone out of our way to invest in companies that have strong climate solutions, and to the point now of launching a separate fund, Sierra Climate. When it comes to what else is different about what we do today, ESG has been terrific for our business. Sherry mentioned how it's given her an opportunity to engage more with the outside world, if you will, community, and just the great interest in what she has to offer. The same has to do with what we are doing with companies. Of course, we're interested in companies being more sustainable. It doesn't happen automatically. Part of actually ESG investing is engaging with companies, and we have been amazed actually how companies have been appreciative of our engagement. And what kind of engagement? A big part of it is actually holding companies' hands, and this is where there are many careers in sustainability. So I can't think of many, if any, companies that feel that they are where they want to be with respect to their sustainability practice, with respect to being sustainable companies. So company by company, they appreciate our interaction with them, our advice, our help on how to become more sustainable. And one simple aspect for so many companies is just to report their sustainability credentials. I'm sure, when you look at and ask asset managers, how sustainable is your portfolio? A lot of times what we'll hear, we don't get enough information from companies. So we try to help companies provide better information. I would say those are some of the differences, and that's
Thank you. Well, no, Charlie, thank you for that. And thank you also for situating it within the framework that Mark had given us, from the negative exclusions onto the positive impact screening and positive selection. And I'm sure that's going to come up further. Our next round of questions for the panelists will be specific to your stakeholder roles, or the roles that you occupy in the ecosystem. So of course, Sherry is a public sector asset owner. And so from that perspective, the Washington State Investment Board was certainly a pioneer in establishing the sustainability officer role that you're currently in. Can you tell us more about what prompted that? So that's the first question for you. A second and related question is, what trends do you see amongst your peers in this category, meaning sectors or asset owners that are in the public sector, and what are they doing in terms of building out their sustainability or ESG capabilities? So Sherry, over to you for those two questions.
Thanks. To start, I think that WSIB has always considered itself to be a responsible investor. We have a potentially indefinite time horizon, so it makes sense to look at issues that may not have a financial impact in the short term, but will over the very long term. Recognizing this, WSIB established an ESG investment belief all the way back in 2014. And as ESG investing started to become more sophisticated, and stakeholders such as our board and the members in our plans grew more interested in the topic, the responsibility to respond, it initially fell on the institutional relations team, which handles media and member relations, in addition to our proxy voting and our engagement functions. This workload grew, and they decided that they needed someone with an investment background as well as an ESG background to help formalize our sustainability efforts. So currently, I sit on the institutional relations team alongside our corporate governance officer, who does our proxy voting and our engagement work. However, I also participate in every investment committee meeting, and I have the opportunity to express ESG concerns prior to allocating capital to any investment product in front of our CEO, CIO, and all senior investment staff. I'd say my role is pretty evenly split between working with the public and our stakeholders and working on the investment side, whether it's ESG due diligence with the investment partners themselves, or building tools to help our internal investment staff make better ESG assessments. As far as trends go with other public sector asset owners, I certainly see more demand for dedicated ESG staff among the public asset owners. For the most part, these tend to be pretty senior roles for investment professionals who have proven expertise in ESG investing and building out sustainability programs. Another thing that I'll note is that in the past, it was somewhat common for these roles to be filled by people with corporate governance, impact investing, or socially responsible investing experience. And it kind of seems like now the demand is shifted toward people with the investment expertise, the traditional background, as well as ESG expertise. But I'll say perhaps more excitingly to all of you all, ESG related knowledge and expertise is starting to become more in demand in traditional investment roles. I'm seeing it listed under desired skills in some job postings, and I hear that it's a topic of discussion that comes up in asset owner interviews across the country. The CFA exams now have sections dedicated to ESG, and they've even launched an ESG certificate for professionals who want to focus on just that topic without having to sit through all 3 exams. It's a sign that ESG knowledge is becoming a critical part of any investment role, and I think that's going to continue.
Thanks so much, Sherry. That's so important that you shared that perspective. And one of the things often here as when we teach at the business school and the law school is that when we ask our students about careers in the investment world, they automatically think about being an asset manager, and they often overlook the opportunities with asset owners, as you're representing, Sherry, and Clara, you as well as a private sector asset owner. So thank you, Sherry, for highlighting the important roles that asset owners play, and also the pivotal role that they've played in driving the ESG ecosystem overall as the ultimate owner of these assets. So Clara, over to you for a couple of questions about NYL. So you did already begin to speak a bit about how the ESG investing or the impact investing team was set up. Can you tell us more? You are currently an EMBA student at the Columbia Business School, and we're honored to have you. Could you tell us how the skill set that you're getting at Columbia relates to the work you're doing, and what role it's playing as you develop yourself as an ESG investment professional?
Yeah, no, absolutely. And before I get into that, I do just want to provide a little bit more context into New York Life and the program itself and what we're doing. So I mentioned that, the catalyst for starting the initiative or the group started really with the events of 2020. But if we take a step back, for those of you that may not be as familiar with New York Life as the broader organization beyond the insurance business, New York Life's been around for over 176 years. And its main business is really around life insurance products, as well as retirement and annuity solutions. And then they have these investment teams where I sit in, and we invest billions of dollars. So the money comes in when policyholders pay in their monthly premiums. That money has to be invested. New York Life manages that most of those dollars in-house. So in terms of when we think about setting up our impact investing team within the firm, it's really of those dollars that get invested every year, it's really dedicating a pool of assets that can go towards social impact. We already do a lot across the E of ESG, so along the environmental, investing in green energy, et cetera. That's attracted a lot of capital over the years, and it's really a narrower focused around social impact. And just to define it, as Mark said earlier, we fit really in the sustainable definition, because it's truly a dual objective program where we need to get market returns and deliver social impact. So the two go hand in hand, and that's really how we plan to scale this program much more beyond the $1 billion that was announced over the next 3 years. And then just finally on the program itself, if I hadn't mentioned it already, it's really focused on affordable housing, so building and preserving affordable housing throughout the US, community development. So, housing is just one component of what's going to help anyone's social well-being. And then you have to create the community around it. So the health centers, daycare facilities, educational facilities, you name it. It's really finding partners where we can provide capital and then allow them to really complement the housing that we're helping to create. And then finally, the other component to the program is really supporting small businesses. That area for us is a bit harder as a large institutional investor to lend at the small business level. So what we're doing there is identifying partners and really looking to securitizations and ways that you can pull small loans and really buy those assets and allow more capital to flow into the small business side. So, just wanted to level set and just provide a bit more detail on the program. But in terms of your specific question around how the EMBA program is helping me in terms of what I'm focusing on today, aside from leaving very few hours to thinking, no, just kidding. But it's been very valuable in the sense of just really giving me that much more confidence in terms of continuing to help me think more strategically and helping with execution of the program. I'm not doing this alone, of course. There is another senior member of the team who's heading up the initiative, but we're essentially working side by side and really trying to think how to scale the platform and really grow. It's like the $1 billion, it's sort of past tense for us, and it's really how do we really deliver significant impact. So just being in this environment, being around my peers, taking the various courses that not only have helped refine skills that I came into the program feeling like I knew, but now I'm, looking to graduate in May and going to walk away feeling like those skills are, I've sharpened those skills even more and I feel that much more confident. It's just, being in this environment really just puts you in a different mindset, I truly believe. And then in terms of just other resources, I'll admit, just time constraints. I feel like Columbia has so much to offer and I just haven't really used it for all of what it has. So as I look to the coursework, I've noticed, again, more and more coursework around impact investing, ESG is being added to the curriculum. Looking forward to taking advantage of that. The Tamer Center, it's another resource that, again, has a lot of focus around, social impact investing. So there's a lot of, aside from being in the classroom and the learnings from that experience and my peers, but there's a lot of other resources that continue to cater to the space that Columbia offers, which is helpful. And I look forward to taking that much more advantage, as time goes on.
Thanks so much, Clara. And part of what motivated us to do this event tonight is to build some community amongst the alumni. And we're really glad to see a lot of alumni interest in this topic. So Clara, of course, as much as you can get done between now and June is wonderful, but you're at Columbia for life as an alumna. So we'll look forward to fostering that community and having you as an important part of that. With that, over to you, Charlie, as an asset manager. A similar question in terms of what trends you see in terms of asset managers building their ESG capabilities. And also, from what you've seen, how would you compare working at firms that are strictly ESG focused versus conventional firms that are increasing or have an ESG fund or an ESG strategy? And Sherry began talking about how conventional funds are increasingly requiring some ESG capability. So if someone is now thinking about either going to a dedicated ESG fund or a conventional house, how would you advise them? So if you could share with us your thoughts on those two questions, much appreciated.
Given our vantage point, being a single fund manager and not focusing on the industry and all our competition, we want to be aware of what other fund managers are doing. But I would say we're from the vantage point, what are we doing and what do we see to some extent, but not as comprehensively as an asset allocator like Sherry or Clara actually. What I would say is that the industry seemed to hit a tipping point as far as interest in ESG investing. Actually, not that long ago, the year 2020 seemed to be a remarkable year where things really took off. And the way we saw that to some extent is really the research and company information, what companies disclosed, and what research we were reading from the investment houses. So I remember traveling to interview the sustainability teams at the major investment banks, and because Europe, as Sherry I think alluded to, being years ahead from her experience when she was traveling to Europe, being ahead of the United States, that's where really the biggest research teams were built out. But they were small teams, and it was early days, and their approaches were just developing. So, a trend is it's a new field, and it's blossomed in a massive way, and just really. This was the first trip where I focused on this was actually in September of 2019. So, just a little over 2 years, and things have changed in a remarkable fashion. What I think is great for this audience is it's early days, ground floor of a growing industry, and being in the first inning, which is terrific. We did have a consultant help us. He's now on a responsible investment advisory group board, and we spoke today about something important to consider. And from his perspective, there's a real skills experience gap in this business, where there's just a great number of people without too much knowledge who are looking to go into the business. So it's early days, but the advice would be learn as much as you can so you can be as skilled and helpful to investment management organizations when you join them. I guess there was something else that I heard again today, Sherry highlighting. I think that when being an ESG investor with sort of a dual mandate, integrating sustainability, it's easy to sometimes not spend enough time on the traditional, we live and die by returns at the end of the day when it comes to investment management. When you have a quarterly review of how well did you do, it's as important as ever to have great returns, and therefore have the skill set that focuses on financial analysis and traditional financial analysis, as well as integrating that, having the ESG side. So I'm a number of different thoughts that hopefully are useful to our audience today.
I'm sure they are, Charlie. And so for the third round that we'll go with the panelists, it relates to advice to our audience. And of course, Charlie, you've already begun giving advice, as of all of our panelists. The questions that we've seen already coming through very much relate to this theme of what advice do you have for people who are interested in pursuing ESG investing? And it would be helpful also if we could talk as well as about JD paths for people you've seen with legal backgrounds and the roles that they've played. So how does that fit in, having a legal background and having legal training into the ESG universe? So what advice do you have for people who would be interested in pursuing roles in ESG? And a question that came up in the chat was, what do you know today that you wish you had known earlier in your careers? So we'll go with a slightly different sequence now. So I'll start with Sherry, and then Clara, and then Charlie. So if we can go to Sherry then for this question about advice to the audience this evening.
Sure, and I think that this might indirectly answer a question that Sophia posed in the Q&A. My advice would be that for entry-level roles, it might be beneficial for you to consider traditional investment positions at companies that seem to have strong ESG or sustainability cultures. Most investment firms are now doing some level of ESG integration, which was mentioned in the initial presentation. The level that they're doing it does vary greatly, but you can generally get a sense for how deeply committed they are to ESG by going through their website, getting a sense for where on the website they're putting responsible investing, how big their teams are that are built out, et cetera. So in the early stages of these interviews, if you find a company or find an investment firm that might look like it's a good fit for you culturally, you can emphasize your interest in ESG, and it might help you get into a position where you get onto an ESG committee, for instance, where you'll be able to contribute to enhancing the firm's ESG capabilities over time. The other thing I'd say is that university level coursework and ESG certificates, such as the CFA ESG certificate, or for instance, SASB's Fundamentals of Sustainable Accounting credential, that'll really help your resume stand out, whether you're interested in doing ESG investing within a traditional shop or pursuing a role within a firm that specializes specifically in ESG investing.
Wonderful. Thank you so much, Sherry. Clara, over to you.
No, what Sherry said was great. And, for me, top of mind, and it was said already, but I'll just reinforce it, is you really need, if you want to move into an ESG investing role, because this is still a relatively new category, you need the foundational skill set. So you still need to focus on just building up your understanding of how to assess an investment without the ESG lens. To me, ESG investing adds another lens, and that's something that you can add to the process, but you still need the foundation. So just to reiterate that. And then the other thing I'll add, hopefully not too cliche, but the good old networking and just being vocal about what it is that you're interested in. So just given this audience looking at careers after MBA, just network and try to find out as much from people, like what ESG really means to their organization, how it's being implemented, executed. I mean, for me specifically, ESG, in terms of what I'm doing, it's still very early stage. We just added a senior associate to the group, so we're growing and building up our efforts. Other firms are obviously much further ahead in their processes. So just networking and connecting with as many people in the industry, because you never know when those opportunities will come about and how it may all play out. So I would reinforce those two messages.
Wonderful. Charlie, over to you for advice to the audience.
Yeah, I mean, maybe you could focus me in on what specific advice, just to
Sure. So someone who is interested in becoming an ESG investor and either has a law background or an MBA background, and today they're looking at the job postings and they're seeing that they're relatively few, and they're saying, well, I would like to be there in, say, 5, 10, 15 years. So what do I need to do today as I'm relatively fresh out of my MBA or JD program to position myself to be an ESG investor down the road?
Exactly. Yes. I mean, I'm not an expert on the legal side, but there are many roles, or some roles, let's say, ESG roles that a legal background can be very helpful. Just, this was actually a topic brought up today by our ESG consultant. In fact, he mentioned that just without me asking. In fact, so I just mentioned that, and I would say that if anyone here in the room would like to hear more about those kind of careers, I'd be happy to just try to give you more specifics. Not my actual main area of expertise at all. As far I've been hearing, building general investment skills, absolutely, it's critical. But I would also say that up to a point, and it's helpful. Our head of sustainability has an MBA, and what he's doing in order to strengthen his finance skills is he's going through the CFA program. I strongly recommended it to him because it's important that he has strong analyst skills on top of being general analyst skills. And there are, good portions of that program today. I went through it before. Much was ESG related, but that is ESG related, definitely. So that is helpful. I would add to that it wouldn't be surprising that there would be, without a job posting, that there are roles in this field out there because of the growth of the industry, and because companies might in the investment management business be thinking of other issues like, oh, we got to market our fund, or we're really looking for someone with this industry expertise. But at the same time, it depends on where they are. If they're in the United States, they have not often been thinking that much, or for very long, in many cases, not all cases at all, but about ESG investing. So just approaching them and having a discussion. Have you thought much about it? When are you going to? Are you integrating ESG at all? How are you integrating ESG? I think this sort of networking and would be valuable and could really lead to a job. Actually, those are some thoughts for now.
My apologies for that. I was my button was blocked there by a pop-up, but thank you for sharing that, Charlie. And certainly we're hearing a theme here, which is it is a yes and situation of having the fundamental investment skills plus the ESG knowledge rather than an either or situation. So the idea is one needs to get those fundamental investment skills and then add to it. Now we can turn to some questions from the audience. And what we'll do is we'll reserve some time at the end for a quick lightning round when I'll go back to each panelist. But before we go there, let me take a couple of questions that we've heard so far and draw some themes. So one theme or one area where we've seen some questions coming in has been around geography. So there was a question asked about how does the US compare to Europe in terms of ESG roles? And also one questioner specifically asked about Hong Kong, but perhaps we can abstract it more broadly to Asia or different regions where you see this. So the question would be, where do we see, from a regional perspective, more action around ESG, or how are there differences in this ESG industry across regions? And what are the implications of that for careers? And maybe I'll pause on that question here and see if anyone wants to volunteer to address that. I know, Charlie, of course, you invest in Europe.
Yeah. I can go ahead if you
Please.
like.
Yes.
Europe, as we've been talking about already today, is ahead of the United States in integrating ESG in investment practices. There's statistically, you could see when it comes to ESG flows, about 80% come from Europe. I mean, so Europe's and the rest of the world is split between Asia and the US. So much more important place for ESG investing today. It's more advanced. It could be more challenging to be as competitive with respect to knowledge. The expectations might be higher because this is not as new a field, if you will, in some respects. But there are more opportunities, bigger, built out ESG sustainability teams, and there's a lot more regulation going on in Europe too, which makes it challenging. And that's also probably where the legal background could be more useful. So I'd say another thought would be go to Europe. It'll be wildly exciting and interesting in this field, and then come back to the United States where you'll have learned a lot and can leverage that experience in the U.S.
And Charlie, if Europe is ahead of the U.S. in this area, where do you situate Asia?
I'm not too close to Asia, but I think in last place. That's my guess. But
Okay.
Sherry's nodding.
Sherry's nodding. So please go ahead, Sherry.
Yeah, I'll nod. I definitely think that for the most part, and from an asset owner perspective, there are some differences. GPIF in Japan has been a leader in sustainability for forever. And so there are definitely differences, but generally within investment firms, Asia tends to lag the United States a bit. But to me, that's actually not a bad place to start an ESG investing career. Again, like that can be one where you take a traditional investment role and just have an impact on the investment team. And I did want to add, go ahead.
I'm sorry, I think Mark was going to add his perspective.
Go ahead. No, Sherry's going.
Please. Okay, Sherry, and then Mark, please.
Okay, one other comment that I think is a huge difference between Europe and the United States that I think might be of interest to the people on this call is the concept of double materiality. So there's in Europe, the emphasis really is, the ESG investing emphasis really is the focus on a sustainable impact on climate and the environment, as well as financial returns. Whereas in the United States, generally fiduciary law is set up such that we can consider ESG factors as long as they have a positive impact on risk or return. So to put it in other words, like we can't consider the impact of environmental and social factors just because of that impact. It has to have a positive financial element to it. And I might have misstated that. Mark, you might be able to clarify it for me. I jumbled my words a bit.
Mark, please.
I'll just throw a statistic on top of this question. There's there's been some research that looks at how companies are rated, and this, I think specifically they're using MSCI, but they could be using MSCI and Sustainalytics. And there's a European companies disproportionately get higher ESG ratings than US companies relative. So if you just look at the distribution of lowly rating companies, average rating companies, highly rated companies, there's a larger percentage in Europe than there is in the US relative to market cap. And if you then add that to emerging markets, there's a much smaller percentage of highly rated ESG companies amongst emerging markets versus developed markets. So that would be kind of my backhanded way of adding information to your question.
No, thank you, Mark. And if I can then turn to another theme of questions here, which is around, say, non-traditional backgrounds, or let's say non-investing role backgrounds. So the first question I would ask around this is, when we look at the ESG ecosystem, if you could comment on non-investor roles. So whether that be in an investor relations role, a compliance role, a operations role, human resources. So the folks who operate in the firm who may not be, doing transactions, if we can speak a bit about those roles and how one might pursue them, that would be the first. And a second would be, in your careers, as you've come across folks with non-MBA, non-CFA type backgrounds, have you seen folks with non-traditional backgrounds, and how have they thrived in this ESG space? And maybe Clara, if I can ask you first, since we'd love to hear your thoughts first, and then we'll see who else wants to answer that.
Yeah, no, absolutely. I mean, for non-traditional roles, so it depends. If you want to be on the investment side, and you don't come from the traditional investment background, it's really willing to take a bit of a step back and come in early enough and really developing those skills as you go, knowing that at the end it'll be a rewarding endeavor and experience, and you'll get to where you want to be. If you're not sure investing, hands-on investing is what you want to do, but you still want to be within the ESG impact investing space, I will say, the other side to what we're doing, and Mark alluded to this earlier, when we go out to market and we say that we're pursuing an impact investing strategy and we want to deliver impact in these areas, we're holding ourselves accountable for actually delivering on that. So the measurement and the reporting piece to this space is very important, and becoming even that much more critical as we go along. And the more into the weeds I get into the space, I realize it's not, the measurement piece is not as clear cut. So where I could see opportunities is in people with academia backgrounds, and sort of coming up with ways to really figure out what that multiplier effect is that, at least on our side, we tend to talk about. Is we know that when we invest in a community, keeping someone in their home will have this domino effect where, now they can get the job. Now, because they get the job, then this happens. So it's really trying to capture what the true impact of every dollar that's invested has, beyond just that at a moment in time. It's like, we invested $100 million, got this return, built this much affordable housing, but sort of understanding what the domino effect or the multiplier effect could be. And there's a lot of discussion and demand for that. So I could see opportunities in that area continuing to evolve. And if you have those skill sets, it could be a good match.
Wonderful, Clara. Do we have others who'd like to chime in on that?
Yeah, I'll add another element. The other place where I've seen a lot of people with varying backgrounds is on the corporate governance side, which is the proxy voting, engagement, advocacy. All of those require kind of a different skill set. They're not directly related to investments. They rely more heavily on working with public companies, engaging with the companies to try to improve the sustainability over time. It's an area where I do think that a JD could come in handy, especially at the more senior levels of corporate governance. And then especially advocacy, if you find an investment firm that was really focused on trying to actually change the regulations surrounding ESG investing, that JD could be a critical element of that wouldn't necessarily require an investment background.
Thanks so much. Charlie or Mark, would you want to chime in on the non-traditional backgrounds?
Go ahead, Mark, if you like.
Sure. I mean, I'm much less qualified because I'm not in the industry like my three esteemed colleagues are here. I would say, just from what I can tell, that to follow Sherry's point, there's going to be a lot of back and forth on corporate governance and proxy voting issues. If you just look at what happened with this relatively small hedge fund called Engine One, and how they basically caused Exxon to change 3 board seats. The ESG activism, which we kind of alluded to but didn't follow through. I mean, I think that's for someone with a JD, that seems like that's an area that's going to grow. That's my impression.
Absolutely. Absolutely. No, thank you for that. No, that's wonderful. And so we're getting a lot of questions. I'm scrolling through here, and there's some questions here about various specific niches and specific regions. So I'll leave those perhaps, as they might be more specific for individuals here. There's a question here about, could you speak to how important you think conventional education in ESG is compared to receiving on-the-job exposure? So someone thinking about whether to take courses in this area or certifications versus on-the-job work. Since this is a relatively new space for some firms, can you please speak to how some firms are adapting to the constantly developing world of ESG? So why don't we take that question? Any volunteers to answer that one first?
Well, I would say, I mean, undoubtedly, it will be useful for an investment management firm, like, say, for example, ours, if when thinking about hiring someone in the field of sustainability or ESG investing, that they're knowledgeable of the field. I mean, they don't have to be an expert, but they've taken some coursework, and there are courses, offered, and organizations that you can follow and join, and conferences you can go to. So I do think that it should be part of the person's language. After a while, I mean, it starts to become, just part of, it's just normal. It's not even, I guess we don't even, so it's almost subconscious for us as we've integrated it, but definitely not learning everything on the job.
One thing I want to add,
please, Mark.
This I think is an important point from my experience, and I just kind of grabbed an ESG teaching relatively recently. But within business schools, it's often separated from normal investment courses. And that, I believe, is going to change. So Columbia, as you know, is extremely well regarded for its value investing program. But I don't believe in it. I'm going to get some emails if I say something wrong here, I suspect, but I don't, if it's wrong, it's wrong. I don't think it is. I don't believe that program has, at this point, integrated ESG into its program yet. So people who want to learn about ESG take their investing courses and as they should, and they might take an ESG course or two, but I think in 3 to 5 years, it'll all be the same. It'll be integrated. And it's just a question of, this is all so new. And I doubt any other business school is any different. So I don't want to give you the wrong impression. But I think at some point, and I'm just more or less agreeing with what Charlie's saying, in a way right now it's separated. ESG, you have an ESG person, they do ESG stuff. I think it's going to be fully integrated, or not. But if it stands on its own 2 feet in the long run, it'll be fully integrated into the security analysis curriculum in any business school.
Yeah, well, that is similar to the theme we were talking about before, of course, Mark, which is the idea that at a conventional firm or a non-ESG firm, if I would use that term, there still is an increased need for that ESG capability. So yes, I guess to some extent, ESG will become part of every investment role. And as you're saying, that our curricula will have to catch up with that across business schools and law schools and other educational institutions. So thank you for that very important perspective. Let me turn to an area for Clara and Sherry around different asset classes. So when you think about asset classes other than public markets, so alternative assets, fixed income, we haven't talked about much tonight. So can you shed some light, Sherry? You talked about representing in front of the investment committee all of the ESG considerations for every investment raised. So how does that differ from asset class to asset class? And then Clara, if you don't mind taking a similar, answering the same question afterwards. So Sherry first.
Thanks. At the WSIB, every asset class integrates ESG from a bottom-up perspective using a variety of approaches that just fit their asset class the best. And so just to kind of broadly bucket it into public versus private assets. So in public equity, we can integrate ESG, our sub-advisors, it's a slightly different structure, like we can hire them, but we're usually not locked into a 7 to 10 year contract the way we are in private equity. If they're not meeting our ongoing ESG due diligence, and we don't negatively screen, but like if they do something, for instance, that's like so bad, we have the opportunity to terminate them. In private equity, we don't really. We have a lockup that means that our initial due diligence on private equity is incredibly important. We need to make sure that these private equity GPs are really integrating ESG, and we need to look into their reputation, see, just make sure that once we invest, we're comfortable with the continued work. And I actually am a little bit like, I'm almost more excited about ESG in the private market space than I am in public right now. It's always been looked at as a little bit behind, but it's growing really quickly, and it's able to kind of take what's already been like definitions that have already been determined in public equity and kind of create a baseline where everyone has a similar level of understanding of what it is. The primary mechanism that I've observed it happen through is the ILPA, the Institutional Limited Partners Association, this large association of LPs that are getting together and telling the GPs specifically what types of ESG information that they want. They are doing all sorts of things like requesting diversity statistics from all general partners from the top all the way down, and just creating this really, I don't know, just like this ability to systematically measure a GP's investment capabilities from an ESG perspective across the board. So like really exciting stuff going on there. And I'd anyone that's interested in ESG, I'd recommend that they look into the private side and not just limit it to public.
Absolutely. And, in one of our first events that we did a few years ago on this topic, that was one of the key insights, was that often in private markets, you'll have a lot more ability to influence the company. Of course, board seats, even control positions. So in some ways, it can be a very exciting way to implement those ESG values. Clara, over to you to your perspective across asset classes.
Yeah, no, absolutely. So just to level set, outside of our impact investment initiative at New York Life, I mean, ESG started being formally adopted into the investment process a little while back. We are signatories to UNPRI, and when I was still on the privates team, we added an entire new section just to go over ESG and assign scores, and becomes part of our investment committee discussion. So every investment that we do has an ESG consideration and discussion. A lot of what New York Life does as a whole is fixed income investing. So we do, some of the negative screening, et cetera. There are sectors that we just won't invest in. But within the impact investing initiative specifically, what we've been doing, so our program sort of runs the gamut of, we invest across asset classes. Again, weighted towards fixed income, but we do have an equity, allocation that we can invest. And you see a lot more governance. So we set up, we invested in a fund of funds and set up a separately managed account where their mandate is to go out and look for diverse and emerging fund managers. So what they do is go out and look for women-led, VC funds or diverse minority, et cetera, funds. So there's that. You're seeing more of these specific mandates that are targeting ESG factors as part of like the criteria of how the dollars get invested. And in terms of our other investments, when we screen for partners on affordable housing, a consideration for us is, okay, so who are you going to subcontract the work to? Who are going to be your suppliers? So because we're doing these, partnerships or joint ventures with certain parties, we have a role in terms of directing, again, like ESG and like which parties get what, which parties get which piece of the pie, et cetera. So you're seeing more and more of that happen across the board.
Wonderful. So as we've now reached the time for our lightning round of closing thoughts. So Clara, if we can stay with you for your anything that you haven't yet been able to say or some thoughts that may have been sparked from others as we wrap up.
Yeah, no, I mean, this discussion has been pretty energizing. Hopefully everyone walks away realizing that this is an area that it's still very much early stages and it has a long way to go. So, I think if you're interested in being an investor in this space or just being aware of what's happening across the world, I think this is an area to definitely continue to follow.
Wonderful. Charlie?
Yeah, I think the area, as we've been hearing tonight and just given the interest is probably somewhat obvious to everyone here. It creates a tremendous amount of opportunities. But unlike perhaps careers in the past, where there's this new window, it might be like in the year 1998, you're interested in technology and you're in a company and you want to help the company become, transition digitally. You have an opportunity to sit within a company, maybe in a traditional role, listen and find ways to really enhance your career and have an exciting career. Or you might choose to dive deep into, arm yourself with ESG education courses, and then dive into a company. Let's say we heard maybe Europe, because there's more going on there and more advanced, and you'd be thrown into a very active place with lots of opportunities to learn. Or you might want to go the other way, as Sherry was highlighting, Asia or the United States, where the firm that you join would maybe separate sustainability or not be that involved today, but will become more involved. Maybe you listen out for the opportunities. I'm interested in this. You're going to have a successful career, because it will happen. It's really a great opportunity for so many people. So it's quite exciting.
Wonderful. Sherry?
I'll try and add something here. Just want to make the point that ESG investing is mainstream at this point, and it's becoming an expectation pretty quickly to have some knowledge of it, whether you're a research analyst, portfolio manager, or in sales, marketing, or any of those corporate governance roles that I've mentioned. And I just want to emphasize that you can have an impact, whether you're in a role at a traditional investment firm or a dedicated ESG firm. Really, all you have to do is raise your hand and show your interest, as we've discussed during the course of today.
It has been so interesting to note that theme across all of our panelists. Mark, would you like to share anything before we?
Sure. I started on Wall Street in 1983 in derivatives. And that was a very new area, and it's grown tremendously. And I was the beneficiary of being at the right place at the right time. But honestly, if you asked me in 1983 what exactly it was going to become, I had no idea. I kind of feel a little bit similar here in that it's new. People are talking about it. The buzz is incredibly, materials incredible, but it's not obvious to me where this is going. And I think we have to all be kind of flexible in terms of seeing how it integrates into the investment process.